Welcome to the Pipnotic Symposium for the 27th of February 2017. I'm currently at an area in Bali where the internet is pretty dodgy. I'm running off my telephone and the signal is pretty weak, so I'm going to try and do this as short as possible. Additionally, some of you may have known I did a supply and demand webinar for FX Street last week, and actually early this week. I don't even know what day is it today. Let's have a quick look. On the 22nd, so yeah, last week, so Wednesday of last week. And I am going to do the same webinar for a weekly symposium here, so you'll have that information as well. And it's simply a more in-depth look at supply and demand than the course that already exists, and this will be a replacement for the new course because it's I gather some additional information that's really interesting and important, I think. So I'll just have that available at some stage, probably when I get back to Denmark, or perhaps if I manage to find a really good internet connection here, then I'll do it for then. Okay, I've had a request to do the Euro Australian dollar, so I'm going to start by doing that. If we have a look at the monthly chart, you can see that we've had these lows here. So we had this really nice strong push higher. We took out all of this micro supply here. You can see just over here we had something going on in there. We can just mark off that area. So we tested it once, twice, and this managed to hold price. And then price is now feeding lower. You can see that this area is pretty important because from this area here we took out all of these lows here. So if we put a horizontal trend line from here, which is roughly at the lows, you can see that we tested it, and then this area of supply caused this horizontal trend line break. So this is an important one. This is where price came back to test. The first test was here. We almost reached into it, and then price managed to feed off, and after we tested here we managed to take out this demand just here, and then price kind of zigzagged for a while, traded in a sideways market for a while, and then we had a couple of deeper stabs into the supply, but they didn't hold, and then price is just rejecting. You can see now that we are actually testing these lows just here, and these are pretty important lows. You can see that they go back pretty far to roughly 2015, so these are very important just because they've been there for such a long time. We had a test, then price, we left the area of supply, we moved off very strongly, we tested the area here, there's probably a trend line break on the daily chart here, and we had massive rejection. So we had the parent here, which is actually a child. This is the parent. We had a child, we had a younger sibling here, we had another younger sibling here. Price fed into these wicks, and now we're moving lower. See, price left, and we're kind of accumulating lower. So we have some bearish accumulation here because it's drifting down ever so slightly. And if we have a quick look on the weekly chart, you can see that we have a downward sloping weekly trend here, trend line. We have this, I've marked off this daily area of, this daily horizontal trend line, which has been broken. If we have a look here, this could also be actually a weekly area, and I actually like the weekly area better. So I'm going to change this trend line to a weekly one. I'm going to move it like that. You can see how we tested, we accumulated, and then we cut through it. So this area here is actually the one that's responsible for that breakaway. So we mark it off like that. We have those two levels there. Price went lower, and actually we managed to move below these lows here. So this area of supply took out this demand here. So we had a parent, we had the child just here, we fed into here, and we went up higher. We tested this area, the child, once, twice, 3 times, 4 times, then we cut through it. The area that did it was this one here. Price, let me mark that off. So price was here. We managed to, there we are. Sorry. This area of supply broke this horizontal trend line and poked pretty deeply into this, and price stabbed into this. We had massive rejection. This is probably news. And we had sideways price movement for a while, accumulating just on this area. Price went up, fed deeper into this wick, and then we moved away pretty nicely. So price went down to the same level here. And then this area here actually is the one responsible for removing this whole demand price structure just here. If we go down to the daily and have a look, you can see that there was a thicket of price in here. We had 1, 2, 3, 4. Let's not count. Let's do it the cleverer way. We just drag from here over to here. So we had 14 14 days of accumulation, so over 2 weeks, almost 3 weeks of accumulation, then price cut away. So this is really nice, and this is very clear on the daily chart what area of supply that did that, and it's actually this one here. So we have the weekly area here, and our more conservative entry is a daily level, and this is at the 140.195, and I'm just going to put that order in because I actually like that. So if we go, make sure I'm risking only 0.25% on this account. Yes, that's fine. So I can see here. So we've got 100 pip stop roughly. So I'm just going to put that one in. I like that. And also the stop is moved above this kind of area of accumulation. So I'm going to put that in. Gosh, some of these flowers here, they're so strong. The smells, it's amazing. I'm just kind of sniffing all the time. I'm not sure where these, maybe it's these ones here. Yeah, there they are. Some jasmine on the table. Okay, so this is about the 59. I'll put it at 55 because we're going to put a bit of a wider stop there. This is going to be a short, and the area to sell is the 140.195. The 41, we'll put 94 just so we make sure we get in there. 41.94. The stop is at the 143. Good. You can see we're trading in line with the swaps, the interest rate swaps as well. So we'll be shorting there, and we'll leave the target for the time being. So we'll put this sell limit in. Make sure we have the right risk. So okay, 400 euros, good. So okay, so this is the entry, and price went down here. I'm just going to move this area to a 1-to-1 about here, about just here, and I'm going to move it a little bit. You know what, but due to the fact that we're reacting at this monthly area, I'm going to wait, and I'm not going to get greedy or silly. I'm going to see if I get filled, and I'll leave it, and if I manage to get close to this area, then I'm going to move my stop to break even and see if we manage to move a little bit deeper. Because if you look here on the weekly, there's price is still at disparity, and it'll have rebalanced once it gets back down to here. So if I zoom out, you know, I'm just going to do this. Go like that, so we can see, and you can see we have this one here. So price, this little area here is the one that caused it, the break of all of that. So I mean, we have kind of free sailing until roughly there, but you can see there are going to be micro areas around here. You can see we have one here, we have another one here. This is like micro demand. So price rallied high, we retraced, moved higher. So this is the most conservative entry for this area of demand. I'll just remove those because it's a bit of a clutter. And so we want to be selling just around here, and I'll leave that in. I think that's pretty cool. For price to have reached parity, for this price move, it'll have to come up to where you can see that price is at disparity now. Parity would be here, so out of balance, rebalanced, but this is also still out of balance. And the area that we could consider here for our area would be from the high here to about there. So the 145.22. So that also is an interesting area to short out if price manages to move all the way back up there. So anyway, I'll leave that for the time being, and then we'll see what happens. So yeah, short the Euro Aussie. Also, if we look at the strength information, you can see that the Aussie has been pretty strong for quite some time. It's the strongest still, and this is the monthly information. The weekly, the Euro is still pretty weak. Also on the weekly here, you see the Aussie yen, the Aussie dollar, euro, and so this is still confirming that we should be shorting this pair. And you can see we're having a pullback on the Australian dollar. There's been a lot of it's been bought and bought and bought. It's been very attractive, and now people are taking profits, or it's having some kind of a pullback there. So that's what we have there on the Euro Aussie. I'll have a look at the Euro Kiwi because they're kind of similar. So if we have a look here, you can see that we are reaching this really nice area. Down here we have the monthly area. We've just tested the monthly area. We tested it once, twice, and now we're kind of starting to feed into it. I have an order to buy here towards the bottom. So we have this area of supply, monthly supply up here. We go to the daily. So I mean, for the time being, as long as this area of demand is not violated, then we have demand in control. If we get a reaction, let's go Okay, so now you can see that we're getting maybe a reaction, but I'm not happy because you can see how price is kind of wriggling down ever so lightly. This is decent. I like this because we have some micro supply and demand there. Ideally, I would like price to come a little bit deeper, and my entry is down here at the bottom. So if you have a look here on the weekly, we have this area of supply. Price sold off. We tested it. We're kind of wriggling down ever so gradually. We're testing these lows. Currently, you can see that we haven't really had any major commitment to close lower than this low here. But towards the bottom here, if we zoom out, you can see that we have this. We had this this area here, the weekly area. So price left the area. Price came back to the edge. Price came back to the 41.77 area. So this is the most expensive that we want to be paying for this asset if we're trading this weekly demand. We go to the daily chart, however, you can see that things look a little bit different. Let me go back. I think it's a daily area that I like. Yeah, you can see here. It's get rid of that we have this bar, this move away. And let me move this over here. I'll just move it like that. So we have this price we left, we accumulated for quite a long period of time. So 1, 2, 3, 4, 5. Please go away. 1, 2, 3, 4, 5 periods, then price cut away. We moved above this high. We moved really strongly away from all of this area of accumulation. And so I think that this is a decent area to have a stab at a buy. Another reason is that down here, I mean, I'm taking the high of the lowest body, which is this one here, and you can see it's just above there. Go like that. And so I think if we get a test there, then we're definitely going to get the ability to take the risk out. And this is the first time back. If we scroll back here, you can see price has not been back since. And so this is a nice, fresh, untested parent, which is what we like. If we go to the 4-hour chart, you can see that we have this area of hourly demand was established. We kind of fed into this monthly area. We started to see some rejection. Price cut away. So we tested the parent here. The chart has been tested once, and now it looks like we're having a trend line break on the 4-hour, which will bring our focus down to this area here. I don't like this. It's really kind of messy, but if we had to do this, we would take the lowest body, which is a 41.4631, and then we have a downward sloping trend line here on the daily. So we're actually in a downward trend on the daily chart, a downward trend on the weekly. Hi, Scared. And so things are looking pretty bearish, but we are starting to react to this monthly demand here. So we have to be a little bit careful. So selling into this monthly demand requires us to be careful because we are very, very low on the curve. And what I really did like is I really like the way price left. We had this area here, and price just cut. It moved away very, very quickly. So that's what we're looking at there. So I'm expecting price to move higher from here. Ideally, as I mentioned, I wanted to come a little bit lower. So we're still quite a few pips away from my entry. Let's have a look. About 650 pips away from my entry, but I think if price comes back there, then we'll get a really good price for this asset, and it might be a pretty decent pair to hold for a while. Note that we are trading out of line with the interest rate swaps, so we're going to be paying every day. So just want to keep that in mind because it can get pretty expensive. Okay, if we have a look at the Aussie Japanese yen. We should be buying this interest rate swaps. This is also a pair that we typically are going to buy because of the interest rate differential between the two. And so we are reacting at this monthly supply. We came down towards these lows. We tested the lows here. So we currently have we are currently moving higher. But we are reacting at this this monthly supply. So what do you want to do? You want to be careful buying because price. You want to be careful buying from here because price is already pretty far up. But if you look low, we have this really nice weekly demand down here. We have an upward sloping trend line on the weekly chart, and this is pretty far down in the curve. So if we use a fib just to see how deep we are, you can see we're roughly at pretty deep. So probably close to the 79%. So price has moved pretty far down. Should it come down to this area here. So we have this weekly area here. We broke the trend line here, the weekly. So from here to here, it's been broken. So the parent for that is down here. I'm going to remove this, a bit cluttered. If we go to the daily chart and have a look, you can see that we have this big pin bar, a lot of rejection, and then price went higher from there. Another big pin bar there, which is where we attached the point of our trend line. And so you can see we have a big pin bar which says smaller time frame. So we'll go and have a look, see if we can see what's going on there. You can see it here. So we have, actually that's not the one. It's here. So we have from this low to here. We go to the, probably go to a smaller time frame just to have a look. If you can see if my broker gives us price information back there. Okay, back. I had to pause the video because it really took a while to scroll back there. But you can see here that we have price stab down in here. We tested down here. You can see that we have about here. So you see how price went down, accumulated, we dropped down, and price cut away from this area here. So this is the price level that we like. We go to the daily and zoom out. You can see it's the one. Sorry, it's the 70, about the 74.50-ish area. I like that area. So that might be a pretty interesting level to look at. Buying. Additionally, if you look a little bit further up, we have this area here that's been tested once, twice. So not a very high probability trade. Again, would be buying into monthly supply. So you seriously want to be looking lower. You see, price has already been back to this level here. See, when we left here, it's been back to this price. So you always have to look left. How far down has price gotten? It's got down to here. So this is a pretty decent area to look to buy at there. Let's go on the weekly once more to see where we are. Yeah, I think that looks okay. As a matter of fact, I'm just going to make sure I have the right risk. I'm going to look to have a stab at that. 1%, no thank you. So we'll have a look down there like that. So I'm going to put that in. And this could take a long time for price to get there. I mean, this is very far away from price. We have a look. It was still, what was it, over 1,000 pips away. But we'll leave it in there. So that's going to be a 0.25 lot trade, a quarter of a lot. We're going to be buying at 7,445. The stop is going to be at 72.40. 72.40. I'm sure I've got my wife and my kids in the background. Okay, let's put that on. Let's have a look here. Where are we? 400 euros about. Go down here. Okay, there's 1-to-1. So on this one, I'm going to go. I'll leave that at 1-to-2 because this is very low down, so that might be pretty interesting. Looking to sell up here as well, as you can see. Let's have a look at that, see what that's all about. So if we have a look, you can see that we had this price rally, accumulated, and then dumped away. And this is pretty interesting because when price left here, it really cut away. You see, we came up in here, we tested this supply, kind of right up in here, just kind of within the wick, and then price cut away. So this is the first time back, and you can see that price is not looking too strong on the approach. But again, we'll be looking to trade at a pretty so we're looking to short on this, which is against interest rate swaps. So I'll be paying every sorry about that, my youngest distracting me there. But we have this area here, and just a really nice release, a very nice release. And you can see that we had this area of supply. We had this horizontal trend line. It's tested, cut away by this one here, and then price came back and tested it. So we're in the wick on the way down, and so this is like a pretty nice area where also we had an upward sloping trend line which is broken at resistance, supply, and so this is worth a go. So I mean, I put it at 1-to-1, and then we'll just have to see what happens. Good. Okay, before I wrap this up, I'm just going to have a quick talk about accumulation. And then I'm going to try and cut this short because the internet speed is super slow and I'm on roaming, and so it's yeah, just pretty slow. So I just going to make sure that the video doesn't get too big. I just want to have a quick look at this accumulation slide that I did during the presentation at FX Street. Because this is really interesting, very, very interesting indeed. And this kind of explains a little bit about what goes on behind the scenes. So, okay, so what is accumulation? This is for all the newcomers to the community. So before we can define accumulation, we have to define liquidity. And what is liquidity? Well, liquidity is the degree to which an asset can be bought or sold without affecting an asset's price. And you're all probably pretty familiar with this because you've all experienced you get into a trade at market price and you're quoted one price, but the order you're filled at is much worse than the price that you were quoted. And this is simply slippage. And this is because the broker has such poor liquidity that they simply can't fill your order no matter the size. And so you're going to get a really bad price. Then you have other brokers such as IC Markets or Pepperstone or FX Open, FXCM, a lot of the other brokers who have a very high number of liquidity providers providing an enormously liquid market. And so little orders like ours simply aren't going to be able to affect the market, of course. And so you're going to get you're going to get the price, you're going to pay the price that you're quoted, which is good. And so accumulation is ultimately on the buy side, which is us, the filling of our orders. So then you have the sell side of the market, which is our broker, and the broker is selling liquidity to us to increase its price, which may sound a little bit counterintuitive. And this is because when they sell something to their customers, the customers buy it, and this buying pressure causes price to go up. And so you have the buy side, which is the broker's view over here, and then you have the sell side, which is our view. And accumulation is our view of the market. So we're accumulating orders, so we're buying liquidity that is for sale from our broker. Okay, and so ideally what we want to see is we want to see areas of accumulation where there's a very clear imbalance in supply and demand. And if we have a quick look at the slide here, this designates simply one a trading period, and this can be a 10-minute chart. It can also be an hourly or a daily chart. So what happens is the market opens and then price enters the period. So this is the beginning of a day. And what does price do? Price moves towards the thicker pockets of liquidity, and it moves through the thin liquidity. So price will move through the thinnest side of the market and approach the thick side of the market. So when price is moving higher, it means that price has to move higher to fill the orders that are coming in to the broker. And so they have liquidity that is for sale here. Sorry, there's a fire being burnt just next door, and so I'm choking on the smoke a little bit here. Hence my swallowing it and funny choking sounds. But price is drifting higher, so we're managing to consume liquidity, and we find a big pocket of bearish liquidity here that caps price, and this overwhelms the buyers. And so now we have an influx of selling pressure, which brings price lower. So now we have sellers that are coming in. They're selling. We hit a big pocket of bullish liquidity. This supports price, and so price turns around. We move up to the big limit orders. They're filled. This brings price lower. We reach a level here. It brings price higher, lower, higher, low, higher, high. And then you can see here that price manages to move ever so slightly higher. And what does that mean? Well, that means that down here, when price got down here, there was so much buying down here and so much liquidity for sale to be bought down here that it was capable to consume the sellers. And so the people who were thought, well, price is really moving lower here, we're going to sell. So we're selling here. And the selling on the other side of the market, where you have the smarter money, they're buying. They're buying from all the people that are selling because they have a pretty good idea that price is going to move higher. And so this it causes price to be out of balance and moves higher. And this causes price to move higher. So it moves higher. You can see here we have a pocket of liquidity. We have 100,000 units of this asset for sale here. price moves up here, we have enough buyers at this level to consume the pocket of liquidity here. What does that mean? Well, that means that if you didn't buy here, you're not going to be able to get it for 113. You're going to have to pay 113.10. And so the asset at this price is no longer available. So now you have to pay a more expensive price. The more expensive price being 10 pips more expensive. And unless you get it here or you wait for a pullback here, you're going to have to paying a more expensive price. And so typically price will gravitate to the side of the market that is able to be consumed, which for this side is the upside. You can see we have 100,000 units, 200,000, 300, but down here we have 300, 400, 600, and so there is a lot more buying down here towards the bottom than there is selling up here at the top. So naturally price will drift in the direction of the thinnest liquidity. Good. And so price closes. What does that do? Well, that'll show us here. We'll be able to see some kind of a bullish candle, and this will probably be a pin bar, and this is going to be an accumulation bar because price entered here, went up and down, up and down, up and down, up and down, then it closed here. So we have a bullish candle with a wick, a little bit of a wick to the downside, a small wick to the upside, and so we had a lot of rejection to the downside, which we can see here when we kind of walk through the narrative of price moving up and down like so towards the thin liquidity. Good. Okay, I think I'll wrap it up at that. We're at about 30 minutes, so that's just fine. I hope this maybe cleared something up a little bit. And as I mentioned, I'm going to redo the FX Street presentation here for the members, and so you'll all have access to this in a future symposium. Good stuff. All right, well, I'll leave it at that. I hope you're all, excuse me, doing exceedingly well. And if you have any questions about something that you want me to run through, please let me know, and I'll gladly have a look. And until then, have a super week. Be safe, and we'll speak soon. Thanks very much.